Great. So now I want to jump into the hidden tax benefits of refinancing. When a refi makes sense beyond the rate.
Yeah.
You know, I get a lot of clients that say, I don't want to, hey, Jared, I need cash. I have $100,000 in credit card and I'm drowning in debt and I have all of these cards, but I'm at 2.5% on my mortgage I did in COVID back in 2020 or 2021. I get this question a lot. I'm actually doing a refinance for a client, okay? They're at 2.875 on a 30-year fixed mortgage, okay? The challenge is they are drowning in debt. Their cash flow is nil.
Yep.
They are robbing Peter to pay Paul. They're charging up cards, okay? They have $60,000, $70,000 in credit card debt. Cool. We did an analysis and we looked at and said, hey, we're going to take your loan, your mortgage first, okay? We're going to take your mortgage, we're going to pay off all your debt, and I'm going to free up $700 a month in cash flow, okay? You're also going to be able to skip a payment, okay? And then when rates continue to fall, which they should, nothing's guaranteed, they could stay the same or go higher, but it makes sense for them to save that $700 a month. So my very first question when I sat down with them was, why are you meeting with me? They said, well, we're drowning in debt. I have no cash flow. And I said, I get all that, but you're at 3%. And they said, yes, we're at 3%. I don't want to touch it. And I said, well, you don't want to touch it, but we have to. And here's why. It makes sense for them. Here's the cool thing. Even though their interest rate's going to be higher, it's going to be somewhere probably in the low sixes versus a 2.875. The amount of money that they're going to save per month to have financial freedom, to have breathing space and not have that stress, because they're like literally robbing Peter to pay Paul.
Yeah.
And I can see it in their face. It doesn't make sense for them to hold on to that 2.875 rate.
Yeah.
We're going to use their home as leverage to get them out of their situation, but they're going to create a better tax benefit because of the fact that they're paying a higher rate. Well, they're going to pay higher interest. Mm-hmm. When they get their interest statement at the end of the year, we're going to use that to save on their taxes.
Yep.
So even though people's rates go up, there's also things on the back end that are going to help you eliminate stress, create more cash flow. Now they can breathe and get through the holidays without stressing out.
Absolutely. And to stack on top of that, from an investor standpoint, if you are someone who's looking to jump into your first investment property,
yep.
Something that a lot of people don't understand is that debt, when you pull debt from a property or pull that equity out of a property, that's tax-free.
And it's good debt.
And it's good debt. You don't actually pay tax on that. So if I have an investment property, for example, that I bought 5 years ago, that I'm sitting at a 3% interest rate on, and that my equity in that property is $500,000, mm-hmm. I can cash out, refinance that property. Yep. I can pull my debt to equity ratio back up to 80%, right? Mm-hmm. And I can take, let's say, $200,000, $300,000 out of that property. Yep. Okay, let's just say $200,000 out of that property. If I can pull that money out, I get $200,000 tax-free, mm-hmm. that I can then take, and I can go use that $200,000 as a down payment on a new investment property.
Yes, sir.
Right? I can then take that investment property, do a cost segregation study, either run it as a short-term rental property if I'm not a real estate professional, yep. or if I'm a real estate professional, run it as a long-term rental property, take that cost segregation study, use that to offset my tax liability, yep. save on taxes with money that I don't even have to pay tax on in the first place, right?
I believe that's what they call wealth creation.
That's exactly right. It's wealth. It's using your investments, using the things you already have to create more wealth, right? Not only that, but